Well, hi everyone. Thanks for joining us for our weekly webinar here at Beresford booth. My name is Eli Yim, and I'm with the Business and Real Estate Group here. And I'm pleased to introduce here the chair of the Business and Real Estate Group at Beresford booth, David Tingstad.
Hello, everyone.
Kind enough to volunteer for some Q&A on the ABCs of LLCs.
I was either volunteered or drafted. I'm not sure.
Right. And so we're going to just kind of go through kind of the key parts. Well, actually, let's take a look at. I think I went too far. The webinar today, we're going to just talk very quickly about some of the considerations that you may have thinking about forming an entity. And then I think we're going to go pretty quickly into why written LLC agreements matter, why they're so important. And we'll walk through the key written LLC agreement terms and kind of highlight some of the issues that we see come up with clients all the time, or that we've seen and had to troubleshoot over the years, and really try and talk in general terms about things you may want to consider if you're thinking about forming an LLC, or if you're thinking about amending an LLC agreement, or anything that you may need that we could help with. So that's kind of the general crux of what we're gonna cover today. And so I thought we would start, David, by just talking about, what are some things that we see with some frequency with clients coming through the door with? What kind of issues are they looking for help with?
Yeah, no, thanks, Eli. And your introduction there, kind of teeing this up, I think was really well said about whether you're talking about amending an existing LLC agreement or formation, because we see a lot of both. And so certainly, on the formation side, whether it's people acquiring an investment property, whether they're starting a new business, or whether they have an existing business that is acquiring the assets of another, or might be merging with another business, to put all of that stuff together. And so one of the things, though, that often gets overlooked are those folks who are amending an existing LLC agreement. And when I say often gets overlooked, because in Washington, our LLC Act started in 1995. And then in 2016, we went through a complete overhaul where we threw the other one away, threw the old LLC Act away, and started with a new one. And it has a completely different structure. And we held on to some of the old ideas, but for example, we now allow oral LLC agreements, where we didn't before 2016. How voting is done has completely changed from the old act. And then there have been, in addition to that, a whole bunch of guidance that we've learned on the tax side of things. So if you're relying simply on your old LLC agreement, it may not work, because it may be under an old statutory scheme. So whether you're starting something new, or whether you need to amend something that's old, because your LLC agreement, just like any other contract, it just doesn't last forever. It's not intended to. Should be regularly reviewed and updated. But then again, with all the economic activity and all the real estate work that's going on right now, we're seeing a ton of that sort of stuff, in addition to just whether it's restructuring or whatever for existing entities. So seeing a lot of that, and really primary concerns have to do with being thoughtful and intentional about what you want for your business. And so one of the things, and what we'll get to, I think, in today's presentation is, hey, be thoughtful about the entire life cycle of your business. So yes, it's important to understand the formation consideration in terms of, okay, what's our capital structure going to look like? Who's putting in the money? Who's going to perform the management services? Those are all important at the beginning, but it is equally important to understand, hey, what does the end of this business look like? Are we intending to have this ramped up and be acquired by a venture capital company? Or is this going to be our family cabin? There are two completely different, every business is different. And so it's really just important to be thoughtful about what it is that we're trying to do, and who's going to do what, and not just at the beginning, but for the entire life cycle of the business.
That's great, and I think you're right. You've really teed up what we're going to cover today, and we'll work our way through the importance of a lot of those considerations and how they're manifested in the LLC written LLC agreements that we draft for our clients. And so, just to take a step back, though, when we talk about primary concerns of the clients, I think people that come to see us, especially when they're forming something anew, um, I think the number one thing that we hear is we have to limit our liability more than anything else. I mean,
Absolutely, absolutely right.
and anything. What are some other are there any other concerns that you would say we hear more than others?
Yeah, certainly. While asset protection, on both sides, right? You don't want that the assets of the entity to be subject to creditor claims out there, but by the same token, you want to protect the personal liability of the members as well. So there's kind of maybe two sides of the same coin. And the other thing is being thoughtful about from a tax perspective. Hey, are we doing this right? Should we be an S corporation? Should we be taxed as a partnership? Being simply thoughtful and intentional about that, because there is really no default rule under the act. So we got to choose here. What do we want? And so a lot of times people say, hey, help us understand from a tax perspective what's best for us. And then the other thing is just the maintaining of control. So yes, liability protection, certainly tax considerations, but how are we going to control this? Who makes what decisions, and what kind of authority is needed? Though I would say those are the principal considerations that we hear.
Yep. And then I think you touched on it a little bit here, David. I think we do a lot of times, especially with new clients who are doing this for the first time, we do tend to walk through, what do you want to consider as far as entity form, right? Do you want an LLC or an S corp or a C corp, and what makes sense for you? And for a lot of the folks that we work with, the LLC, it just tends to lend itself to the most and greatest flexibility. And so we do quite a bit of work with written LLC agreements and forming LLCs.
Yeah, no question. And the word that you used really caught my eye there was flexibility, because oftentimes even at the beginning of the entity, you don't know all the answers. That's one of the cool things about LLCs is that they're incredibly flexible. They can change over time. So I think that's really well said.
Okay, great. Well, some of this you've touched on already. When we talk about a written LLC agreement, it's very important that you know what you want. And you may not, our clients may not use the exact legal terminology, and that's fine. But to have an idea about what they're looking for regarding control or the financial side of things, or how, what they want to contribute from the outset, all those things. And that we really want them to take a staged approach. What you mentioned, think about the entire life cycle of your business or of the LLC. Everything from what is our name and what is the purpose of this, all the way through what does dissolution look like.
Yeah.
And so I think that's very important to kind of walk through for those reasons too, and kind of prompt our clients. Of course, we're available as people have questions, working through some of those things. And then, you mentioned it already with talking about the work we do amending LLC agreements, that nothing's set in stone. Some of it, by necessity, we should update and amend. And other times, circumstances change, partnerships change. And so nothing's set in stone. We can always do an amended LLC agreement to match.
Yeah, that's exactly right. And the problem is, when you don't have an agreement and then you come to us and there's already a problem. Well, if there's no written agreement, that's just a breeding ground for litigation. And while we have, Eli and I are somewhat allergic to litigation. We've seen the horrors of it. We've got a ton of litigators here too. So certainly we can help with the litigation, but it's just far better to avoid that litigation at the outset by, hey, let's get at the very beginning, let's get it in writing. And again, you're right, Eli, it's not going to be set in stone, but there are so many things, so many problems that can be avoided by having a written agreement. And that's something that's new. Under our old act, written agreements, written LLC agreements were not allowed. They are now. And so LLC litigation is just exploding, and the evidentiary matters. And how do you know that was the agreement? How do you know they're 50-50? How do you know if a contribution to an LLC, is it a capital contribution or is it a loan? Who are the members? I mean, we see that all of the time. Who's that? Those kind of simple things. Who is the member and has an interest in the LLC? And it is all but impossible to figure those things out. And so you go back to look at emails and conversations. You look at tax returns, and it ends up just being an absolute morass of expense that can be avoided if at the outset hey, let's stop, let's write this down, we're going to be intentional about it. So can't emphasize that enough.
Yeah, and that brings up a really interesting question. I know that we've talked about briefly as well. You know, there are people, we've got an LLC Act, right, in the Washington state statutes. And so, you know, people may think, well, why do I have to do a written LLC agreement when I can just default to the statutory terms, right? I mean, they're there. I mean, they tell you how everything's going to work or should work, from voting, or, you know, and you can default to those terms. But why is that not necessarily the the greatest approach?
Yeah, no, I think that's true, because one thing is our statute has a bunch of flexibility built into it. And so on the one hand, while there are certain default rules, those default rules don't answer all of the questions. And then the other thing is, you may not like the answer to what the default rule gives you. For example, let's say you have a typical 3-person LLC where one person puts in all of the money and the other 2 are providing services in exchange for their interest. And they're all a third, right? And let's throw some dollar figures at this. Let's say that the person who puts in the capital puts in $1 million, okay? And the other 2 service providers don't put in any money at all. The default rule under our act is that you vote based on, if you're a member, you get 1 vote. So in this case, the 2 members who haven't put in any money control the whole LLC, 2 to 1, right? They can outvote the person who's put in $1 million. The person who's put in $1 million may not be really excited about that. It shouldn't be, actually. And if they had sat down to think about that and said, hey, I don't want that default rule. In addition, there are a bunch of default rules associated with things like what happens when somebody dies. And additionally, there's no default rule on indemnification, meaning that if one of the members gets sued because they were a member of the LLC and there's no written LLC agreement, that member does not have the right to indemnification from the LLC. And yet that's what most members think they get when they become a member, some sort of protection from that LLC. And so without a written agreement, it gets really problematic, and we don't know is the answer to a lot of questions that we should know the answer to. So for whether you're talking about management or capital contributions or when a member dies or indemnification or transferability, these are all things that you just may not like the default rules, or there may not be any default rules at all, hence the need for written LLC agreement.
Yeah, I mean, you have an opportunity here to craft something to fit exactly what you want and need for your entity, for your business, or
that's right,
your partnership. And so why not take advantage of that and you know, be as thoughtful as you can. Well, you may not have all the answers at the outset. You at least can be as thoughtful as you can, and work with your partners to work through the issues, you know, proactively and kind of think through. I think this may come up later as well, but I think in some ways we appreciate the clients who take the time also, where it's not an emergency, that they can actually, they're coming to us where they've got the luxury of time to really work through those things from the outset. Because we do sometimes see, you know, where we're, you know, got a quick shotgun approach to putting something together, and it may not be exactly what you want, and it's still better than not to have a written LLC agreement in place, and you can always fix it later. But you know, to the degree you can be thoughtful at the outset, that's always, you're going to be in a better position. So
agreed completely.
Okay, so we you know, we see a couple of, you know, things that we work through with our clients early on, and of course we want to know, you know, what is the purpose, and we also want to know, you know, who's going to be involved here. Is it just a single member LLC, a marital community as a single member LLC, or are there multiple members? And so that's something that people usually have an idea about before they come to see us. But we can help walk through the differences there as well. I do think for purposes of today's presentation, we're really going to approach this as a multiple member LLC, just because I think that there's more complexity there involved with the written LLC agreement. So for our purposes today, we're going to be focused there.
I like it.
All right. So as we kind of look at some of the key LLC agreement terms, this is what we're going to cover today. And it may seem like a throwaway here, David, that we start with definitions. And, you know, it's very easy to be dismissive of the definition section. But you can get a sense of the LLC and really the critical information that you need from your clients and what they're hoping to get out of this agreement just from the definition section. You know, everything from the financial terms to members and managers to membership interests in the LLC and of course tax considerations. So talk a little bit about the definition.
Yeah, no, we do have a tendency on occasion to maybe gloss over the definitions, and we shouldn't. I'll give you an example. Every LLC agreement needs to have a definition of either distribution or cash flow is the term that we'll use. And so, but cash flow, which is what members want, right? They want to get money out of the LLC. And if you don't know what that is, if you don't know what a dividend or a distribution or cash flow, all possible words that you can have, how do you know when you get it? And how do you know who decides what that is? So oftentimes you'll see a definition, for example, of cash flow that says it's all of the income of the company, less all of the expenses of the company, less reserves. And those reserves are determined by the sole discretion of the manager. Okay, that's tucked away in that, you know, initial definition section. So in effect, the manager might, you know, has a funnel and they can just squeeze that or loosen their hand, and that figures out whether money is going to flow or not to the other members. And so if you're one of the other members, you'd like to know, hey, what are the conditions? How much are the reserves going to be? When am I going to get some money? Because there may be tax consequences without any cash to take care of those tax consequences. So that's an example. And you're right, Eli. By looking at those definitions, we'll also figure out, hey, who's the manager? How's that defined? Is it a committee? Is it one person? Even understanding some tax consequences, like you can see some definitions about whether there are capital transactions and how allocations for that might work. So I don't want to go too far into the weeds of that, but you can see, and the definitions, and there are oftentimes many of them, but it's important to understand those defined terms and then use those defined terms consistently throughout the agreement. And oftentimes we blow by those because we think we know what they mean, but oftentimes we don't, because we don't check that definition section.
Right. There's certainly some room for discretion in the definitions and kind of lay out what we're going to see later in the agreement. But, you know, there are important citations to the tax code here that also are critical to how the LLC is going to be taxed over the course of its lifetime. Let's see, let's move on. The fun section for a lot of folks is organization and purpose,
right?
Because they get to contemplate, you know, why they're on this journey of forming an LLC. And although I will say that we see a common sticking point here where a lot of folks struggle with coming up with a name for
One of
their
the most
LLC.
difficult things about forming an entity is figuring out the name.
Yeah, it is odd. I get it though. I get it. You want that perfect name, but here in this section, I don't know if there's anything you want to highlight here, but you know,
There is
possibly.
actually, Eli, and that is to take some time to define the purpose, because and over again in the reported cases that we look at, when something is happening, there's a dispute among the members, and perhaps a court is being asked to judicially dissolve an LLC. Almost every LLC act across the country defines judicial dissolution when a court decides it's the court that the LLC can't, consistent with its purpose, act and it's no longer reasonably practicable to do that. Okay, and so if oftentimes you'll see a purpose as any lawful purpose. Well, that makes it all but impossible for a court to analyze whether or not that entity is carrying out its purpose any longer. It also helps, if you'll identify the purpose, it also helps clarify what kinds of or how the fiduciary duties will be applied. Again, if you have any lawful purpose, then the authority of the managers may be incredibly broad, and their fiduciary duties may be incredibly broad. But if your purpose is, we're going to operate a commercial building at 145 3rd Avenue South in Edmonds, and that's it, that informs what the purpose of the entity, and therefore what the authority of the managers and how their fiduciary duties are going to be applied in that situation. So I do think it's important to be thoughtful on that point. And any lawful purposes, it's not real helpful.
Right, and yet we do see that quite a bit.
All the time.
Yeah. Okay. Capital. David, if you could talk a little bit about some of the different ways that people, capitalize their
Sure.
LLCs, and what if there are any pitfalls here as they kind of think about that.
Yeah, well, there's tons, probably too many pitfalls to
Right.
go into too much detail, but you think of capital as, how is the entity going to be funded? Where are we getting the money? And usually you have, the members who are either all contributing an equal amount of capital, or you have, different classes of membership where you have capital members who are each putting in a certain amount, and then you have service provider, somebody who, for example, may be managing the property or finding the deal, putting it together, and they're going to have different interests, but yet capital is, every business needs it, and so having this conversation, and I see it all the time. Oh yeah, well, I'm going to put in $1,000 and somebody else is going to put in nothing. Okay, well, what do you get your money back first? And when you say the other person is putting in nothing, well, they got to be doing something. They're providing some service, even though it may not be technically a capital contribution, but having an expectation of what are those services? Is somebody going to work 40 hours a week, or are they going to work 2? And simply having that conversation to set the expectation of what those services are, or if additional capital is going to be required, and what happens if somebody defaults on that capital contribution. So these are things to be thoughtful about, and simply, having the conversation. Usually those things aren't too hard to figure out, right. But understanding and having a reasonable expectation of it is absolutely critical, whether you're talking about putting in cash, putting in real property, or putting in services. Again, services aren't technically a capital contribution, but nevertheless, it's what you're contributing in exchange for your interest in the LLC.
Yeah, and I think you're right. I think people sometimes will have the conversation before they come to us, but it may not go far enough.
That's right.
So they may have the conversation, like you said in your example. They say, well, I'm going to put in X amount of dollars, and so is going to provide services. Well, they think that's sufficient, or they use that as a way to kind of estimate, I'm going to put in X amount of cash as capital, and so that's going to entitle me. I'm going to say I get 60%, and then this person's going to provide services, and they're going to get 40%. But they're really just kind of spitballing membership interest percentages without really working through, just how much effort is involved in those services. If it's a restaurant, are they working full time and really doing all the legwork for it? Yeah. So walking through it a little further, I think, would really help to to
And
clarify those things from the start.
Eli, you've heard me say this before. I'm sorry to interrupt you, but that process of going one step further,
Yeah.
I've said this I don't know how many times. Spreadsheets are our friend.
Right.
So hey, by thinking through, I'm going to put in this capital and then run it through a few years of examples. How much am I getting back? And is that fair for both the service provider as well as the person who's putting in cash? That will really help get you there.
That's great. And I will say one other thing I wanted to check with you on. What are the dangers of undercapitalizing?
Yeah, no, great question. Well, first of all, it's one of the bases to actually pierce the liability shield that's in place for an LLC or a corporation for that matter. So if you underfund your company, you can put yourself at risk personally. But in addition to that, if the company doesn't have enough money, it fails, and that's probably one. I mean, the chief reason I think companies fail is because people just don't make decisions. It's not necessarily for wrong decisions, just that they fail to make any decision at all, put their head in the sand and think the problem's going to go away. But then right alongside of that is just not having enough capital, and whether it's to fund the growth or whatever it might be, you'll die with insufficient capital. So absolutely critical to have enough.
Okay, great. All right, this is my favorite issue to discuss with David here, because we have clients all the time who it's very easy to get confused sometimes, and they have trouble distinguishing between allocation and distribution. And if you could talk about the difference there between those two things, I think that's a critical piece of this. Drafting process.
Thanks for teeing that up, because it really is. The huge, people confuse these issues all the time, and so I try to explain it this way. Allocation does not involve putting money in your hand. All allocations are about are tax consequences. Okay, the vast majority of LLCs are what we call flow-through entities, which means they don't pay tax. The individual members pay tax. And so how much income does a company have? How much loss does it have? How is that loss going to be allocated among the members? How is that profit going to be allocated among the members? And those are significant issues in terms of how individual members will pay tax. Completely separate and apart from those allocations are distributions. Distributions have nothing to do with tax consequences. They have everything to do with cash in your hand. Okay, so I'll give you an example. Let's say a company in year one makes $100, okay, but doesn't distribute any of it. Okay, so zero distributions, because the manager decided, no, we need money for next year, so we're going to hold all that in. But nevertheless, the members are going to get allocated that $100 of income. So they're going to pay tax on that $100, even though they didn't get any cash. And so if they don't have other cash from other operations somewhere to pay whatever their marginal rate is on that $100, then they don't have enough money to pay their tax, and that's bad.
Right.
So making key distinctions, and that's where also who's contributing what capital is there. That really helps inform how allocations are going to happen. There are different ways to do allocation. Sometimes you allocate based on positive capital accounts. Sometimes you allocate based on percentages. Sometimes you allocate based on what's called a targeted method of allocations. And there's a million details within there, but understand from the first point, allocations are not distributions. And by the way, there's no default rule either in our act between the two. So we need to understand who decides when distributions are made, how much reserves in the company, and the tax consequences are often driven by the IRS, but there's a lot of flexibility within subchapter K of the Internal Revenue Code if you are taxed as a partnership, that everybody should really be thoughtful about, hey, how can I get the biggest bang for my buck here? So if you'll be thoughtful about that at the outset, and you can't get too cute with your allocations. They have to have what we call substantial economic effect, but with subject to that limitation, You can handle allocations with a lot of creativity, and distributions the same way. Oftentimes, you're going to want to make distributions to those who have contributed the capital first, and there's all kinds of different waterfalls and things of that nature. And I can see, Eli, your eyes are starting to glaze over. So I don't want to go too far afield here, but nevertheless, you've teed up that important point. A lot of us don't even consider those things. We just percentages and that's it. Well, wait, there's lots of other ways it could be done, both allocations and distributions. So let's be thoughtful about it.
Right. Thanks. That was my thoughtful face. So you're confusing it. Well, let's move on. I know when we talk about management, of course, people understand to some degree, right? There's difference. You can have a member managed LLC or a manager managed LLC, but and you can have multiple managers. But really, when we look at management, we're trying to distinguish between who's going to be able to make decisions on a day-to-day basis, who's going to be required to make decisions that are extraordinary, and this is also the section where we would also have limitations on liability and indemnification. So it's a critical section in the LLC agreement.
Yep, I completely agree.
Anything here? I mean, I think people kind of get the management piece as far as trying to decide who's going to do what, and everything's it's going to depend on who's involved and who the partners are, right. And what you want to do. They can get a manager who's not a member, right? Yep. And I think for the most part, I think that's pretty self-explanatory. I think as we work through those issues with our clients, they tend to grasp that pretty easily.
I would like to point out one though, and it kind of gets back to the need to have a written LLC agreement. Let's say you have two members, and in the absence of a written LLC agreement that dictates a different result, they each get a vote. And so deadlock is a very real possibility. And so this is one area, the management section is where you need to be thoughtful about, even if you have even members or even capital how are we going to break deadlock so the company doesn't die from a deadlock? And that's a place to really be, again, I guess, be thoughtful about that issue too.
Yeah, and we have creative ways that we've worked with clients to write things in there to figure exactly those scenarios out, right? To figure out how are you going to deal with deadlock. So yeah, that's a great point. Admissions and transfers. So how do people become members, or are members allowed to transfer their membership interests? In a critical section here. So I don't know, David, if you wanted to.
Yeah, I'm really tough to underestimate this. So the LLC Act says that you can't, once the company is formed, you can't be a member without the unanimous consent of the members. Okay, so and you can't transfer your membership interest. And so this is a really important distinction to make. LLC members have really two pieces of what they own. They have a management piece, which gives them the right to vote, the right to books and records of the LLC. And then they also have an economic right, what our LLC Act calls their transferable interest. So that's the right to allocations and distributions. And so what there's free transferability of is the economic part, unless you have an agreement that says to the contrary. So let's say Eli and I are members of an LLC. I could take my economic interest in the absence of an agreement to the contrary, and I could give my economic interest to my kids. Well, Eli may not be real excited about that. I can't give my management rights to my kids. My kids don't get to vote my interest. But all of a sudden, is Eli now in business with my kids? And one of the cool things about LLCs is they're subject to a principle, what we call the pick your partner principle. Okay, that's why there's this restriction on transfer, completely different from corporations. Corporations, you can transfer your stock, again, that's the default rule, without any restriction, basically. I mean, there's some securities rules and things of that nature, but basically free transferability. That's not the way that it works for LLCs. So if you are a member of a 50-member LLC, it's way more likely that you're going to have people coming in and out. But if you have a 3-person LLC that's just family, hey, no, we want to restrict our membership to just our family. We want to know who we're going to be in business with for a long period of time. So oftentimes you'll start with a general proposition of just outright prohibition on transfer, but then there are some exceptions to those rules. What happens if someone dies? Oftentimes their economic rights will transfer by their will, but not their management rights. What happens in a single, I know we're talking about multi-member LLCs here, Eli, but what if you have a single member LLC where the member dies? Without an agreement, you can end up causing dissolution of that entity when maybe you don't want to cause dissolution, when there's no longer a member. So there are a host of possibilities there. And again, this kind of gets back to the purpose. If you have a family cabin LLC, you're going to have a whole lot of restrictions that are different than, say, if you have a software company that has an LLC with 25 members, or a group of physicians. There are all kinds of different restrictions, and this is one of the cool things about LLCs is they're so flexible. They can be used across a host of different industries and professions, and are. Now, they're far and away the entity of choice. Upwards of 90% of all new entities are LLCs, and so this flexibility. And Eli, you made a point at the beginning of our presentation that to be thoughtful about all these things, thinking all the way through the life cycle of the business. And this is where a lot of those times those things come home to roost. How are we going to deal with this? And this is where it's going to get dealt with oftentimes.
Yeah, and just to take it out, your examples were spot on, and I think too, just to take it out of the theoretical, right? We see people come in, and there is that question about how do we want this to transfer or not transfer to the next generation, right? In a family type business, or in a family type LLC, or even if it's something like a cabin, a family cabin, or real property. Or we see people thinking about the involuntary transfer scenario that you mentioned, death or disability. What happens then? You can really find yourself in some sticky situations if you haven't thought through those things, and right, you could wind up with a dissolved LLC when that was not the intention at all.
That's right.
So, all right, and that segues us to the last piece here: dissolution and winding up. I don't know if it is exactly what it says, but there are some important considerations here to think about. When it's time to close things, what is the process for doing that? And David,
yeah, not only Eli, not what is the process, but who carries it out.
Right.
So should there be unanimous consent to dissolve the LLC? In other words, should we all have to agree? Okay, it's time to dissolve. What if 2/3? What's the right numbers? And there's nothing magical there. There's some default rules, unanimous consent to dissolve your LLC in Washington. That may not be the best solution for a particular business. So it's also critical to understand that dissolution doesn't end the entity's existence. At that point, instead of it being a going concern that's doing business, that entity now has to engage in this process of winding up. That winding up process involves notifying all the creditors, making sure that those creditors are paid, and only paying the correct creditors. Things like landlords and contingent claims, and oh my gosh, think of all of the developers with condominium units and things of that nature. Okay, if you built a condominium, you're really, really interested in, hey, when can we have all of this wound up? Because water intrusion issues are a real thing. So that dissolution and winding up process, what is it and how it occurs and who does it, putting all of those together, there's a lot more to it. And a lot of times people don't want to think about that at the outset of their business, because hey, we're starting this business and away we go, but your business is going to end at some point. It's going to end, whether it's for economic reasons, it's for health reasons, whether you sell to a competitor or a venture capital company or whatever. So this is where you're going to be really thoughtful about what that looks like. And then should people get their capital back first? If we have the classic example of somebody who puts money in and somebody who puts services in, should they all get the same money at the same time? The capital provider is going to say, no, I should get all my money back first before service provider does, right? And so really, really important. We see a lot this really problematic in a lot of old LLC agreements that need to be amended, where they haven't worked through in a thoughtful manner how that process works, and they end up with some real surprises, particularly for the capital partners. So it's a critical piece that you can't get tired in putting your agreement together. Oh, we're at the end and therefore it's not important. No. You got to work all the way through.
Right. You understand though, it's not as fun to think about that as some of the other sections are, but absolutely critical, and can be very, the winding up process can be, really cumbersome and formidable if you've got a lot of assets to work through and creditors to deal with, and it can be a protracted process for sure.
Can be, that's right.
All right. Well, I hope this was helpful for folks, and David, thanks so much for taking the time to talk through the written LLC agreement with us. I think there's a lot of really valuable information in what we covered, and of course, if people have any questions, our information is here on this slide, and please feel free to reach out to David or myself, and we'll see if what we can do to help.
Thanks, everyone. Have a great day and a great weekend.
Yes, thanks very much.